We must dare to think about unthinkable things, because when things become unthinkable, thinking stops and action becomes mindless. William Fulbright. This is a paradigm shift. Please keep your friends and family aware. Like, subscribe, share these videos. I am not a financial advisor.
This industry needs to work, must work, has to work inside the regulatory framework. A few years ago, there was this thing called ICOs that were very popular. I wouldn't touch them with a 10-foot pole. They largely were very clearly, to me, unregistered securities offerings. And I think the SEC pretty quickly took the same point of view. In a very similar way, this industry needs to work within the constraints of the regulatory systems of the countries that they operate in, as well as the international system. That's the way it's going to thrive. And what that means is that the regulatory community needs to create smart regulation, rather than have, either try to fit this industry into kind of old forms of regulation or have uninformed points of view. So, for instance, we've seen a couple of senior officials recently say that Bitcoin is all used for illicit transactions. And it turns out that less than 2%, in many years, less than 1% of Bitcoin transactions are illicit, while U.S. cash, $100 bills, are 80 to 90% of them used in organized crime and tax evasion. So we need to get beyond those simplistic understanding. Go ahead, I'm done.
Glenn Hutchins is an early Ripple investor. He's a successful investor that once was on the board of the Fed of New York. He knows the laws and wouldn't touch an ICO. He's invested in Ripple and wouldn't touch ICOs. The crypto industry needs to work within the law, and that's how it will thrive. That's precisely what Ripple is up to. Either regulations need to update or the regulators need to be informed. I believe Glenn Hutchins is doing his best to inform regulators.
The first is the crypto genie's out of the bottle. You can't put it back in.
Crypto is here to stay, and they can't simply regulate it away. They know this.
The first is the crypto genie's out of the bottle. You can't put it back in. So this is a global phenomenon, and there's obviously no Bitcoin or Ethereum CEO to call if there's a problem. It's just software running on the internet. So, if you think about regulators or policymakers trying to use U.S. entities effectively as choke points, the activity is not going to stop. It will just move peer to peer. And I think of it like this. If you think about Tesla, a U.S. company trading on U.S. markets, it's really a U.S.-centric thing. And it's really hard for non-institutional players outside of the United States to access it. Cryptocurrencies, of course, are the exact opposite. Take Bitcoin, for example. It's fungible all over the world, accessible by everyone. So there's only so much any one regulator in any one jurisdiction can do. Ripple is a good example of this. As people know, the SEC filed a complaint over the holidays, and it caused a number of exchanges in the United States to delist Ripple, even prior to Ripple responding to the SEC. But you know what? Ripple's up 84% over the last 12 months. So what does that tell us? It tells us that XRP, while it has suffered some damage in the United States, it's far from dead due to the global nature of the asset and its global accessibility. If this type of action had happened against a U.S. publicly traded company, the United States is the only geography that really matters. But here, it's just one of many, many different geographies. So it's complicated.
What happens when another nation's financial industry enjoys the benefits of cross-border settlements at a fraction of the costs? What happens if central banks build CBDCs on top of the XRP ledger? Is the SEC going to shut down SMEs in Cambodia? The SEC can't stop this, and the market knows this. That's why the price is higher.
Yeah, I think it'll be very interesting when Gary Gensler comes in as chair of the SEC. He spent the last few years at MIT. He's a student and a teacher around Bitcoin and blockchain technology. And the director of research for crypto at SEC has been promoted to report directly to the chairman. So I think we're going to see a lot of attention on it, and the people who are focused on it really know what they're talking about. I think the early days of the SEC, there was we're not quite sure what animal this is. Okay, now they are sure, and that's very healthy. I think it's positive for ultimately for approval of an exchange-traded product. And I think the most important thing, just think about what we're saying here. The risk everyone used to bring up to us when we first started when we were first involved very early on with Grayscale, and still very much involved with Grayscale's GBTC. The risk we always heard, the pushback was the government's going to shut this down. I think we've moved far away from that, and here we're putting into place a chairman of the SEC who's very familiar with Bitcoin, understands its value, and a research director on crypto whose background is more technology than finance. That's a terrific combination.
Gary Gensler is a tech guy rather than a lawyer like Jay Clayton. Gary understands the nuances of technology and has publicly stated that cryptos evolve. The government is not shutting down anything. They need the tech to innovate out of the problems they have created. Gary understands this.
Well, we're starting to see more institutional funds, so I don't think that the two are related. But I do think there are a number of corporations. If we step back and ask about the corporate treasury bid for Bitcoin, what MicroStrategy has done is really not that different than what the big German industrialists did as they started to see the devaluation of the currency ahead of the hyperinflation. I'm not predicting that hyperinflation is going to hit. I'm just saying that there is a historical analogy. And we have a number of tech companies, Square included. Square started with a 2% allocation, now moved it up to a 5% allocation. Obviously, Tesla, Overstock.com was the first to do it back in 2014. So it's a small number of companies, but where I'm going is that especially the tech companies have huge cash piles, and they really do need to start thinking about that cash as an asset that may be burning a hole in their pocket. What is the purchasing power of that cash in this environment? And is there something that they should be doing as fiduciaries for their shareholders to protect the purchasing power of that cash? And I think especially tech companies, it's not a surprise to me that some of the most forward-thinking, innovative companies are the first ones to dip their toes into this water. And in spite of the difficult accounting, are making allocations because they're making a judgment call that it's the right thing for their shareholders in order to maintain the purchasing power of the corporation's assets.
Corporates are starting to add Bitcoin to their balance sheet. As the governments continue mass debt expansion, the confidence in dollars is lost, and smart money looks to hedge against inflation. I'm bullish on crypto because I don't see an end in sight. We are never going to pay off the debt. More debt will be added. The more debt, the less confidence.
That, money, politics, these things really do go together. They're systems of power in our society. And so we can't be naive, thinking that the issuance of a certain form of money, the issuance of a different kind of fiat is suddenly going to dramatically change anything about the way the world works in the immediate short term. I do think, though, that it's important to kind of have the understanding of what could transpire and be planning for that down the line. And I'm sure that that's exactly what the Fed is doing as they explore this digital dollar project.
The digital dollar is forward-looking. They know where the money is headed, and that's why they will be moving forward with the digital dollar.
Somebody wants to know, do either of the panelists believe that CBDCs will be backed by Bitcoin, that governments will actually be buying Bitcoin?
Look at Sheila's facial expression.
By Bitcoin, that governments will actually be buying Bitcoin. Governments will actually be buying Bitcoin. So Sheila, maybe we can go with you. And apologies, just a minute left.
Yeah, those are very different questions. Do I think governments will be buying Bitcoin? I'm sure there are sovereign wealth funds that own Bitcoin, whether they'll admit it or not. So that's.
I'm sure there are sovereign wealth funds that are buying Bitcoin, whether they'll admit it or not. A sovereign wealth fund is a government-owned investment fund. Central banks buy gold on the down low in case of hyperinflation. Governments are in control of crypto regulations. With clarity, I expect price discovery. Maybe the sovereign wealth funds are also positioned for that possibility.
And one question, do I think a CBDC would be backed by Bitcoin? I guess I'm not really following that, because the premise of a central bank digital currency is that it's fiat money. So it is the same thing as the paper dollar you're holding. It's just a digital version of that. So no, I don't think that would be something that would happen unless there's some new product that's conceived of that probably has a different name.
So who is Sheila Warren? She's a Bretton Woods committee member. She's a World Bank Advisory Board member. She's also part of the World Economic Forum. She's head of the Blockchain Distributed Ledger Technology Division. You may remember her from last year's Swell conference. Ripple is also a partner at the World Economic Forum.
Those things are kind of solved, and what you're doing is really putting an additional kind of parallel system in that everyone agrees is going to be compliant, right? There's not a huge concern there. But as we really move to the unbanked or underbanked, there's some threshold questions. One is the goal to get some of these people into the traditional system or not? Because if it is, it's a very different approach to a CBDC than if it's not.
It's easier for them to make a whole new system than it is for an inclusive legacy system. The system is not being flipped upside down. It's being replaced.
I think the Federal Reserve this year is going to have an official pronouncement related to crypto firms getting access to the payment system. There are multiple applications now in front of it and big policy issues, but big policy opportunities. I completely agree with Nick's prediction that having these instruments inside the banking system, especially U.S. dollar stablecoins, actually is good for the U.S. dollar's position as a reserve currency.
I think FedWire is going to break down. It will be blamed on a group of hackers. It will cause a panic, fear, uncertainty. And just like that, FedWire will be updated from legacy system to new system. Digital dollars are coming, regulations are coming, the system is being transformed. The biggest lesson I learned from Vietnam is not to trust our own government statements. I had no idea until then that you could not rely on them. William Fulbright. Thank you for watching, liking,